All right. Start this off. I want to. I'm just gonna wait a little bit for some more people, obviously, but I want to delete all these zones, and I'll teach everything as we go through it. All right, we're gonna start off in like 2 minutes here. Before we chart, I just want to go over this quick supply and demand PDF that I made, and just go over some things, and then for the actual drawings, we're going to do that live here. You guys can all hear me good, right? Everything's good before I start? All right, awesome. All right, before we get into the actual supply and demand aspect of the charting, I just want to get over some hard to swallow facts in here that I made. We're never always going to catch the whole movement. We're never going to catch the exact high, never going to catch the exact low. We're just looking for a piece of the move, and granted with that, all the technical analysis, everything that we're going to be doing is really only 20 to 30% of our trading. The other 80% is going to be our emotions along with our risk to reward. So just like anything else, supply and demand is just the imbalance of the market. We're going to use these zones to enter and exit the market, whether we're going short or long. This will put us along the institutional traders. This will make us get the great moves up outside of chop and get the best risk to reward along with volatility and volume. So supply and demand obviously doesn't just go to stocks or trading. It's for anything. You can do this between a plane ticket, literally anything at all. Concert tickets, whatever it would be, there's a supply and demand aspect. If demand increases and the supply remains the same or is lower, a shortage will occur, thus moving the price higher, as you will see here, and vice versa. If the demand decreases while supply is the same or increases, we're going to get a drop in the market price. And then the drawings we're all going to do here together right now. And then you guys can have all these zones that we have in here. So we're going to start off with this in here. We're going to start off at a day time frame, or 6 hours even fine. Obviously it's way too choppy over here. There wasn't that much of a steady day in here. So we're just going to go down to a 6. And I do this every day. I recheck my work every single day, which you guys should be doing. We go down to a 4. before, we can see some selling in here. Still a little too big. There's not an exact candle, so we're going to drop it down again to a 3. We're just going to keep on doing this till we find a good area. You can see a 3 in here, but we don't have the selling volume. You need volume to come along with supply or demand, right? You don't want to see a small drop in the market or a big drop in the market with a little bit of volume. You want to see aggressive volume come in. And we're going to come here to this point in here. And we can see there was a big sell-off in here, right? Before this chop, if you can see the bottom of the screen, I'm going to move my face real quick. Okay, so in here, in these candles, you see this chopping area, there's no volume. This was after hours, so I don't consider this. You need to consider volume when making these zones, right? Almost no volume in here, 7,000 on the candle, and then as we get to market open, you can see the 7,000 total volume turns to 37, 73, 300,000, right? So this is going to be our zone here. We're going to take these two candles together. This is going to be our basing candle, this green candle, and then our dropping candle, this supply candle, right? Now we're going to take the top of whichever candle is higher. In this case, it's going to be the basing, and we're going to fill the engulfing candle, right? We're not taking the bottom wick. We're going to take the body of the candle. And that is going to be our supply zone. A lot of traders will do this, or a lot of traders will end up doing something like this. You need to fill the body of the basing candle, the green candle, not the red candle. That would then be this. Sometimes it is shorter or short, and traders will then take that. You need to see this candle be fully engulfed. And we're going to take not this wick, but we're going to take the top wick. It's very simple. As you do it, it becomes muscle memory. Again, we're not taking any of these candles into consideration. If you go to a 3-hour in here, we're going to see more chop. You go to a 4-hour. Again, a bunch of candles, and then the chop along with no volume. You want to see the volume in there. So we have a 2-hour perfect supply zone in here. We're going to take it down to a 1-hour to see if we can find a miniature supply zone. If this candle would have dropped all the way very quick, I would consider this a 1-hour inside of a 2-hour, but the fact that it rallied back up and then followed down makes this a perfect 2-hour supply in here. So this is our 2-hour supply. When we have a wicking like this, it was obvious with volume too. I would just mark this for a trend line, but that will be in a different video. That will be in my pre-market plan. Or just any other, trading plan video. Yeah, the break of supply to the top side will deem it invalid. Same thing with the demand zone. If we break to the bottom side, the demand zone is deemed invalid. If we break that soon, for example, if the market came like this, and then we come back down or we trade up here, in the same day or next day, I would consider this a key zone. You want to see then buyers support this area, but it is not a supply zone anymore. It is invalid. Now we're going to go back to a 4-hour, and we're going to look underneath it to see if we can find any other zones in here. Okay, so along with this, you can see this looks like a perfect zone again, right here for a 4-hour. But it is a little larger than what I like for ES. I like to knock them down. It's going to give us our best risk to reward. It's going to give us a smaller zone to trade in, to look to take short, and it's going to give us a less of an area to be wrong. So this 4-hour is valid. I'm going to keep this like this, but I'm going to look to trim it down in here. Three hours the same. A 2-hour is looking better in here. So I'm just going to knock it down a little more in here for a 2-hour. I'm going to keep on going down the list. Okay, so now we come into this where you always want to look to the left first, right? Because then we're going to think this is our supply zone, yet this might be here. If we can knock it down even better, you can see the drop, then the rally back to retest the supply zone, and then the drop again. So we're going to keep on looking at this area over here now, being that from a 2-hour perspective, from just red candles on a 1-hour, we have a basing candle in here. So now my area of interest is here now, not this. You'll see this when we start to create it, that this was your supply zone. We came back, we retested it, and then we failed again. I'm going to knock this down even lower now to a 45. 45 is the exact same. We're going to try a 90 minute now and see what it looks like. Exact same thing with the 90 minute. You don't see any basing. You don't see a actual supply zone. So we're going to go to a 45. We're already there. We're going to try a 30 now. I want to get the zones as tight as possible to give us the best risk to reward. 30 knocks it down a couple points in there. And now for this, we're going to see, again, it's still a little bigger than what I like it to be. We're going to drop it to a 15 here. Okay, so the 15 is a lot tighter. And then you also, with this tightness of this zone, you have the confluence of the second touching the actual supply zone perfectly. And then as you can see, as we get in here, volume increases, and we fall. So I'd rather deem this a 15 minute than a 1 hour supply zone just because it's a lot tighter. Like I said, the 1 hour was somewhere in here. So instead of looking to get short in this area, we were to look to get short all the way up here. We saved ourselves about 9-10 points roughly in ES to look for a short. That's a big move. That's a lot of points right there looking to short. So this would be a 15-hour supply zone now. Again, you want to see the basing candles wick. Sometimes it doesn't look as pretty as the other one where we got both wicks. We don't have a wick in here. You want to see the basing candles wick along with engulfing the basing candle with your supply zone in here. We have volume as one confirmation, the aggressive volume on the sell, and then we have the second touch of supply in here as a second confirmation. It has to be a body closure, not a wick. The top wick to the body of the basing candle. This is incorrect. This is correct. And you can see just by moving it from a 15 minute, from a 45 or 1 hour, again, made it a lot tighter. Instead of trying to get in short over here, seeing some possible selling, you're looking to get short up here. You're saving yourself some good points in here, saving yourself a lot of money. And then again, the trade works out, you're making a lot more money. Immediately after seeing this, we see this zone in here too. Same exact thing with the supply. We're going to track that down really quick. Again, a 15 minute in here. Sometimes it does not look as pretty where the double wicks are happening, but that is 100% valid. Confluence with volume, confluence with the second touch of supply in here falling. Very, very simple. And we're going to move to this one in here now. We're going to go all the way back, a 4 hour. The higher the time frame, the better it is, the more volume, the more chance of volume there is in that market, in that piece of the market. But if they're too big, I like to knock them down to a smaller time frame. The accumulated volume in 4 hours is going to be way different than the accumulated volume in 15 minutes. The higher the hours, the more volume accumulated, the more orders were filled to bring the market down. So again, I don't see anything here. Big drop. Going to a 3. Bring it all the way down, nice and quick. All right. This is a 1 hour drop, base drop. Volume confirmation, perfect. Again, the top wick, these wicks are close together, and the body. Make sure you do not get that wick. This is invalid. You want the full body. This is a decent sized zone. It would deem valid in my opinion for a 1 hour supply in here. Again, I'm going to look to knock it down because this was also intraday to this movement. This wasn't on a separate day, this was intraday. This touch of supply also happened on the same day of this supply. So I'm going to a 45 minute now. 45 minute, close to the same. I'm going to do the same thing, mark it back up. 30 minutes. even tighter in here. The 30 minutes is nice because we have a small rally and then sellers lining back up to bring it down. I'm going to look for a 15-minute. I don't really like the 15 minutes that much, but if the zone looks super valid, I will take it. We have 3 wicks touching here, so the 15-minute is way too small of a zone. The 30-minute is absolutely perfect. The 15-minute would be this. That's a 3-minute supply. Not many orders were filled in that area compared to a 30-minute. So the 30-minute supply here is valid. You can look for the 1 hour, or you can mark the 1 hour down. If I see a lot of confluence in the market for a 1 hour like this, where there is a lot of wicks in this area, there's a lot of holding, I will then either make a double supply like this and just mark this 1 hour down, or I will then do something like this. It becomes an area of interest for me now. The true area of supply, in my opinion, was the 30 minutes. Nice tight zone, gives me something to work with, enough room to work with, yet to manage my risk would be perfect. This would be an area of interest now, which I had marked out for my pre-market plan today. And then we'll look for what we see in here. Any questions on the supply zones? So that area that I had marked out, you can see on that news candle today, the perfect touch. So again, that's confluence if you want to write a 1 hour in a 30-minute, and you can look for, I have it up here on the all-time highs. I have it on NQ, I believe. I'll show you what I do for stuff like that on NQ. So we have a 1 hour inside of a 3 hour on NQ. This is a little more advanced, but if we're trading in this area, my first area of interest would be the 3 hour, right? I'm looking for sellers right here. If they hold this, this becomes noise to me unless we get to this 1 hour. Once we get to this 1 hour, that's when I'm looking to short this 1 hour supply. If I miss this move, I would look for a break back down to retest this area and make a head and shoulders pattern. As you can see, shoulder, head, shoulder. This is again a little more advanced, but like I said, this is what I look for when I find 2 zones stacked into each other. The 3 hour is a little big, in my opinion, for NQ in here, but it's still valid. It's still noted for me, just like how on ES, that zone that we just saw that touched perfectly this morning on that news. Let me just back up here. This zone right here was that 1 hour supply. We touched it perfect, and now we're trailing underneath it. So 30-minute supply, 1 hour right here. Like I said, I did not mark it down as a supply zone. I marked it down as an area of interest for me. That is the 30-minute supply. Now for demand, we're going to go back to a 4 hour. Again, if I'm looking at this area, I want to look to the left first, because it's possible if we have a demand zone in here, this isn't a true demand zone. So I'm just going to slide this way. 4 hours, you can see we have something in here, but that does not touch it. So I'm looking now to make my zones in here. Again, I'm going to mark this down as a first area to look to make a zone. This again is a little too big for my liking. I'd like to knock this down. I don't want to look to trade inside of a 40-point zone in here. I'm going to go down to a 3 hour. I don't see nothing on a 3 hour. 2, knocked it down just slightly. We'll go down to a 90-minute. Same thing, 1 hour. Now I do this for every zone. I'm not doing this just because you guys are watching, for you guys to learn. I personally still do this myself. Not a big fan of this candle in here. You can see, even though this was after hours, we did get a volume spike. This zone isn't being made over low volume like this in here. See, there's no volume. After hours, we got that volume spike. That's like, what do we have here? We have 8,000 orders, and in here we have 2,000, 4,000 orders. So we have a lot more orders after hours. So I would consider this a zone. I'm going to knock it down even more to a 45, see if I can get something that looks cleaner. 45 looks pretty decent in here. And again, I'm still going to a 30. The 30 is a little bit bigger, but I do like the wicking on it. Now the same thing for this. We're going to, this is the basing candle, right? We're making a base here. We're going to take this wick and we're going to engulf the body. We're not taking the body of here and we're not taking the wick. We're taking this body engulfing. Basing, body engulfing right there. Not the wick, not this one, the basing candle to the lowest wick. That is now our demand zone, 30-minute demand zone. I'll look for a 15-minute again, but 20 points on ES is all right for a zone. Over here, we don't see a drastic move up when we move down to a 15 minutes. We see this consolidation, so I do not like it. I'd rather the 30-minute, very, very clean, basing, green candle, huge rally. That is a perfect 30-minute demand zone right there. Now again, I'm going back to a 4-hour. I do this every single time. That's why I do it once and then I just stay up to date with it every day. All right, so it's very obvious. You can see this area in here and this area in here. Decent size move up. So I'm going to look to make demand zones out of one of these two areas. Hopefully it's this first area and we have confluence with the second area. That is what we're going to be looking for. Every confluence you can add in the market will give you a better risk to reward and more confidence to take a trade. So the base and the rally. This is my first area of interest again. I'm going to look to knock this down again to see if I can get it even smaller and make miniature zones out of it so I don't trade in between. 2 hours smaller. 1 hour is even smaller in here. I like that right there. Again, confluence right here. We're going to look for a 45. All right, so the 45 is smaller, but we don't have this confluence in here of this touch. We're missing about 6 points in here from a touch in here. So I'm gonna go back to the 1 hour. This is a perfect example in here, actually. So when we fall, again, we want to take the basing candle. We don't want this, we want this candle in here. So I'd rather take this zone, make this an area of interest, and then possibly get a demand zone in here. So nice tight zone, like I said, 8, 10, 12 points is probably going to be the best. That's going to be an area where I can make a zone out of here and then look for chop in between to not trade in. Instead of trading in a big zone like this, looking for a possible reversal in this big area when there's plenty of trades that can be taken in here, plenty of chop that can happen between all the zones. Again, we want to manage risk, so we're going to manage our area of entry. We're going to manage where we want to enter. This is already 1, 2, 3, 4 candles. We're going to look to see if we can get a bigger area out of this. That's way too big of a candle. Again, from the 4 hour, 3, 2, all the way down. Look for a 90-minute in here. All right, so with this zone, unfortunately, the way the market has been acting, we've obviously been stacking zones pretty dramatically here. 1, 2, 3. I don't like how I don't have confluence in here. I'm going to see if I can make this slightly bigger, since it is a small zone, to have the confluence of these touches in here. So I'm going to go back to a 90-minute in here. So I'd rather take the big zone, right? As you can see, volume is heavily increased here. Look at that buying volume soaking everything up. So this has to be a key area for me. I can't just say I don't like this zone and I want to try a different zone and just make a marking. That huge volume soaking up all these sellers and then rallying up, I can't deny that that's a zone, and then I have the confluences between here and here. We can look to take a smaller area, again, like I said. We can look to have this confluence in here and possibly see a sweep of these lows for sellers to activate and then get squeezed out to demand. Again, this is a lot more, a lot harder to learn. You're gonna have to learn this through time. But something like this, my first area of interest would be the top of this. And then as we get lower, I'm going to look to hold these possible lows in here. Again, big buying pressure, huge wicking. That means buyers were very interested in this area. You pair that with the first demand, I'd rather take a bigger zone like this when we have one confluence, the whole market holding, and this big wick over here. You can't deny that that's a demand zone, especially breaking this low, creating the pain where everyone's going to think too short, right? This was at 10 a.m. Buyers held this up very good. Breaking this low, everyone's going short, but they don't notice we're in a demand zone. As they short, selling pressure decreases, buying pressure increases, and we rally up dramatically. So I would look for something like this, again, using my markers. I would look for something like that. 50, 30, 625. If it were to break, I would not be interested in shorting it for the fact that we're in a demand zone. Now it can short and it could fall all the way through on bad news, whatever it could be. But personally, the risk to reward for me, along with the confluence of the market holding this area and liking this area, as you can see, huge buying pressure after hours kicked in, and then in here. There's no way that I would look to short this area with all this buying happening here, especially not in demand. Like I said, we could squeeze it low, and then we get into the 1 hour demand, and then the market can rally back into equilibrium. Now for this intraday in here, very tight price range, obviously, after hours. I'm going to look to do the exact same thing. I have not marked these zones out yet myself. This would not be a valid zone because we had this wick touching this demand in here. You cannot do it on the same body. You cannot say that this is a new demand zone because one, you have to take this wick into account. You have to go to the lowest wick. That would already be inside this demand zone. That's why you always have to look from the left to the right. If you were just looking at this, you would try to consider this a demand zone in here, right? You would see a big rally up. Yet the true demand is laying right here. Always from left to right. We're going to remark this down again. Also for this, 5031, like I said, I would rather mark this down. 5036. If you're having trouble, if your screen looks like this, the easiest thing to help you marking down a zone is just expanding. Make everything look a lot bigger. We have a nice rally, base rally in here. I'm going to see if I can make this a zone. I'm going to see if I can take this down a notch too. Again, 15 points, not bad, but it's also intraday. it is a rally-based rally. You want to see if you can knock them down a little bit smaller when you have a basing candle rather than a drop-based rally or a drop-based rally like this. The continuation moves, the rally-based rallies or the drop-based drops, which we saw over here, you want them to be slightly smaller than if they were just a rally-based drop. The smaller you can make your zones with the confluences of everything else will give you a lot more edge and a lot more risk management, being that you're deeming your thesis incorrect in a smaller frame of the market, and you're also entering in a smaller frame. So it's a no-brainer trying to knock down the zones, especially when you can grab confluences from other parts of the market. All right, so the 30-minute in here, I see this now that we marked down to the 30-minute. We come here, it is a smaller zone, and we get that nice touch in there. We have volume. Over here, if you can see, once we'd start to make the zone, this is the end of day, and then this rally happened at 4:30. Volume is there because of the rally, but it's not intraday volume. It's not as big as these candles in here. So this is holding my interest way more than this. Also, this was a previous supply in here. We rallied here and we fell. So I like this way better than this one. That's why I said you have to keep on going down the time frames, because if I didn't go down the time frame, I'd start to look at this zone in here when that's not the true zone. You always have to double check your work. This is why I personally do it myself. Even if you went to a 15-minute, you can even see the 15-minute candle comes back in, 30-minute candle comes back in, 45-minute, you cannot see it. You don't see that there's a small demand zone in there. So you always have to drop it down. 30-minute is valid right there. This is going to be a little harder in here, being that news move. Take this to a 45, 90. 1 hour looks the best so far. 1 hour is too small, in my opinion. That's too small of a zone. All right, so the 2 hour looks best in here. So I'd make this a new 2 hour demand in here. Very, very simple. Again, you want to see the body get filled. It's not the wicks. It's not both wicks like that. It is the body of the basing candle. Rally, base, rally. This move, again, after hours, I don't care about this move. There wasn't enough orders filled. This basing and then this news move is what I care about most. There's a minimum amount of points. Yeah, so as you go up the time frame, there's no way you're not going to find a move that that isn't big enough. This is a smaller one because it's on news pre-market. But if there's no movement beforehand, if like, for example, I'll show you like this. All right, a 30-minute, right? So we looked at this 30-minute. There's no movement here. There's no true candle in here because there's no volume in here, right? Volume kicks up here. So you want the accumulated volume of the candles. If we had a small movement, a price of interest, an area of interest, I would mark it as a key zone. As you can see, I do here. Key area, key markers, key area. Usually these key areas are, as you can see, support, volume accumulated, support, 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 breakthrough. And then as you can see, again, this was not made after market. This key area was posted. It's probably been a key area for a couple of days, but I know I posted it today in the pre-market. There's no coincidence or chance that we just randomly hit this area on news candle and it lines up perfect with the key area that I made, right? This is a small key area. Anything that doesn't deem a demand zone would just be an area of interest for me. That's what I mark as key areas. And if you're a part of the Discord, whether it's the premium or the free, since I post a lot of my stuff in the free Discord too, you see that the key areas hit every time. They're areas of volume, support, and resistance. Some of the areas, like for example, like this, you won't understand why I put the top of this zone here at 80.76 unless you watched volume in these areas, unless you were there in the market, looking at volume, looking at the delta prints, looking at price action, understanding why the top of this zone is here, and the same thing for the bottom, because I could have put the bottom here, I could have put the bottom here. There's just a million places I could have put the bottom, right? I could have put it over here, but it's at this exact area for a reason, and news hit it for a reason, right? As you start to watch price and movement, order flow, everything, you're going to start to make key areas along with these demand zones and supply zones. The key areas don't mean as much to me, but obviously they do mean something as we hit them perfectly. You know, this key area of 50.67, again, this was marked out pre-market, I believe, along with this key area to this key area in here. Those perfect touches of everything. That doesn't just happen in coincidence. The drop to 17,900, I don't have it here because I took it out, but I believed I marked, let me look in the pre-market plans. So I marked 51.66. So yeah, 51.66 on here. And I also marked, let's see what this is, 51.40 in here. I believe they hit together. Was a previous supply zone in here. So when the market is moving differently, for example, 2% on NQ, 1.3% on ES, or if you have some divergences with the candles in here, or yesterday when there was divergences, you're going to find that some supply zones on ES, like this, or demand zones down here, are not going to line up perfectly with supply and demand zones on NQ. They're going to line up with key areas that you have marked out. So I always look at them together, and when you look at them together, for example, say we're shorting NQ, right? Actually, we'll go ES because there's a bigger space right now. Say we're shorting ES, and we start to stutter in here, right? But our true take profit is here, and NQ is coming down to this key area in here at 17,900, for example. You're going to want to look to take profits, being that NQ might hold the market up, along with Apple, Nvidia, all the confluences, and you're going to look to take profits in areas with the confluences of NQ, maybe VX, Apple, and once you add all these confluences together along with supply and demand in key areas, that's when you're going to learn to take your profits or take trades in certain areas that it's not directly associated with an older zone, right? You know, you might look to take it here, but you start to see it stuttering, you start to see NQ in that zone. Like I said, maybe Apple's holding a support, Nvidia, whatever. That's when you start to add all these zones together if they're too small or not a demand zone. But I will zoom out so you guys have these zones now. If you guys join late, this is a 15-minute in here. Any questions, let me know. If not, I'm pretty sure we're good on the basics of supply and demand now. I believe this is a 2-hour in here. All right, so those are the zones. Also, if you're part of the Discord again, I have everything marked out already on the intraday commentary, so you can just always copy it from there instead of copying it now. So like the same thing for here as I'm hovering over this area, you have a resistance, a support, a breakthrough and hold, a resistance, and now a support. This is an absolute key area. No problem. Again, if none of you guys have the PDF, I have it in the lobby. and I have all my zones. I'm going to have to recheck my zones since I delete them, but I'm pretty sure this is the basics right here. Yeah, so the bigger the time frame, not necessarily meaning the bigger the zone. For example, like a 4 hour, I treat that with way more respect than a 15-minute zone. There's way more volume accumulated. Some people don't even trade on the 15-minute chart. The true traders who are looking for big moves, they trade on 4-hour charts, 1-hour charts. So what I see on a 15 minutes, some traders might not see since they're trading the 1-hour chart. This being said, the people who trade on those 1-hour charts, they usually trade a lot bigger size. So the big size comes in on a bigger time frame. Also, the bigger time frame, like I said, it accumulates more orders, even if it's in a tighter area. Even if it's in a wedge, you have 4 hours of orders rather than 30 minutes. So that's 8 times the time that orders can execute in that area. So that is 8 times the volume. It could potentially be 10 times the volume. Could even be only 2 times the volume. But chances are, the bigger the volume, will be in a bigger zone, a bigger time frame zone, not necessarily being a bigger price zone. So 100% a 4-hour zone, I treat it with way more respect than a 15-minute. And sometimes there's such big price movements that a 15-minute zone is hard to get. So I'll make a key area with previous areas of interest in that zone, but I've never made a 5-minute zone before. I would not go that low. The lowest I go is 15, and that's only recently too. Before that, I did not go lower than a 30-minute. If we're looking at stocks like Amazon, Apple, stuff like that, which it's good that I just mentioned that. I want to mention something else about this, but let me finish this first. It's hard to get a 4-hour zone on Apple, Amazon, stuff like that. The chances of getting a zone like that is not likely. I'm looking for a 15-minute zone or a 30-minute zone on Apple. If I get an hour, that's even better. Obviously, the higher time frame, like I said, I like it better, but the chances of getting a zone like that is very unlikely. Also, I want to note, completely forgot about it because I usually just do indices, but for the equities, you cannot do supply and demand after hours. So you're going to go to your sessions, you're going to go to regular trading hours. It's going to look like this. It's going to be kind of iffy to trade in between this, but you cannot mark out a equity zone after hours. It has to be during trading hours. I believe I marked it down here. Yeah, so for futures, they can be zoned all hours of the day. For normal stocks, do not zone them after hours. They have to be zoned during market operating hours. So it's going to be hard to do it like this. Seeing it like this, seeing the price movement, you're going to get confused, especially on a bigger time frame, where, for example, you might think that this is a new supply, yet most of this volume was accumulated during after hours. That is absolutely key. That will mess up absolutely everything if you mark them pre and post market, regular trading hours. You can see that's not a zone anymore. Again, 15 minutes, 30 minutes seems to be the sweet spot for Amazon and stuff like that. And again, stretch out your screen. Key demand in here. I guess that's why I had that marked out. But I personally don't trade these anymore. I really trade NVIDIA. As you can see, my areas of interest for NVIDIA for drops, areas of confirmation, and then Tesla also, I believe. Yeah. Key demand in Tesla, rally past it, nice wedge in between. All right, anything else? No question is a dumb question. I actually just answered a question. Someone just asked me, how far back in time do you look when you start from left to right drawing the zones? You look until you can't anymore. If we start to get to, I'll show it on a day because it can't, as you can see my zones, well, this was from be adjust over here. Yeah. So say we start trading, down here in futures time. Say by next year, whenever, we're looking at these areas down here. If you don't look from left to right, you're going to think you're making new demand zones in here, but your zones are going to come from here. You're going to have to find demand zones from 2022. And if we start to get really low, you're going to have to look in 2021, 2020, all right? All these zones are still valid, even though they were years ago. Everyone looks back that far. You have to look from left to right no matter how long it's been. Obviously, the sooner it's been, the more of a chance that zone's going to work. But you have to just use what the market gives you. You're going to look at zones like that. You're going to look at psychological areas. For example, SPX over here. The market was in a middle zone when this hit, and buyers ended up soaking this area on SPX, right? We fell through a little bit. Buyers showed present, and then we rallied super hard, holding the 5,000 area. It wasn't perfect, it wasn't pretty, but you can't always expect everything to happen on a tick, especially when you're looking on bigger time frames and looking at huge psychological numbers. 5,000 area was held good. I remember VX ended up hitting a perfect resistance as this 5,000 area traded, and that led us with a reversal in the market when ES was in a random zone, kind of. Like I said, the confluences between everything else. Anyone who really trades, Forex and stuff like that, they're looking at the SPX area. Anyone overseas, they're looking at the SPX area. So just note that. I can go off topic for like 5 hours about different things, but that's about it for the supply and demand aspect. If you don't have the supply and demand PDF, like I said, I dropped it in the lobby. If you can't find it or don't want to look for it, just DM me. I'll send it right to you. So any other questions? If not, we'll end it here. I'll probably do one of these every week. Basically teaching the same things, but just going a little more in depth for certain things each and every day. So stay tuned for that. We're going to be going over support and resistance and key zones next week. And just the basics of everything. Like I said, I can go a lot more in depth with supply and demand and order flow. But I'm really looking to just teach the absolute basics of everything. And then in depth, obviously, in the master course and everything like that. No problem. All right, it seems to be we are good here. Like I said, probably Monday or Tuesday, I'll do another little one like this. I'll even go over weekly market sentiment, what I'm looking at for the next couple days coming, along with news and everything. All right, so thank you guys for watching. Again, PDF, DM me if you don't have it.